Hey, good morning. It's Mayor Valensky with Driving Markets. Okay, so I hope you're not getting bored with the driving markets, because I'm trying to make it as entertaining as possible and keep you enthused with logging on and subscribing. And the idea is to keep it informative and to give you some idea, a bit of education, where the market's going, etc., etc. Talk about different areas, whether it be FX, whether it be cryptos, whether it be indices, whether it be bonds, whether it be shares. There's lots of viewers want some tips on which direction the shares are going, which particular shares, anything regarding FX trading, cryptos. It's very hard to give a tip, because generally speaking, the tips I give, most of them have lost money over the years, just to give you an advance warning on that. So when I do give tips, I do give indications. It is an indication only there, just to give you a little bit of flavor as to what's happening in financial markets. Okay, so let's kick off. So yesterday, the markets were absolutely hammered. We're talking about from the opening of the market bell in New York all the way to the close, the markets were just pushed down completely. In other words, they reversed all the gains that were made on Wednesday. If you remember, Wednesday evening, the Fed came out with a 50 basis points increase on their interest rates. And the market liked that, because what they said is that the Fed stated that they're not going to raise the interest rates by 75 basis points in June. And the market was just unbelievable, so excited. Said, yes, well, it's great. We're now on to fantasy wonderland. And the market shot up. And then they woke up from the dream on Thursday and realized, whoa, hold on, we're heading for a recession here. It's going to affect corporate earnings. We're going to maybe go into unemployment, higher interest rates, super high inflation, and a war in Russia and Ukraine that potentially could be spreading to Moldova and Belarus. And then they began to sell off the market. So one particular viewer contacted me and said, you know, there's a lot of information, but it's quite negative, all your views. They're not negative, and I'm not negative. What I'm trying to state is where we are in financial markets and the facts. I'm not being negative, I'm being objective. At the moment, we are on the verge of going to recession based on the global geographic and economic outlook. You've got high inflation, high interest rates, you've got nervousness in financials, you've got nervousness in the high tech, which has really driven the market over the last 10 years and now probably lead the market downwards. It's not doom and gloom, as another viewer said, it's all doom and gloom. Well, what I answered her was, well, no problem. You know what? I'm going to state that interest rates are going to go back to zero, inflation is going to go down to zero, price of properties are going to double over the next 12 months, and the high tech, the Nasdaq, is going to double over the next 12 months. But that's not realistic. So I'm just being objective here. And if objectivity deems as doom and gloom, then I apologize. That's not the idea. So the Nasdaq was down yesterday at 1.800 points. Now the Nasdaq has led the growth over the last 10 years. And the Nasdaq needs huge amounts of money poured into it. The high-tech sector needs huge amounts of money pouring into it, simply because they don't make any profits. If you speak to any high-tech CEO, startup, or any on the stage 3 or 4 of the funding, and you say, okay, what's the profit forecast like? They look at you and say, why are you talking about profits? We don't talk about profits. What we do is we go to bed, we have a dream, fantasy, wake up the next morning, we sell it for $300 million. That's it. There's no such thing as profits. And the investors, which are mainly American investors, are now into these startups and into the high-tech sector, are questioning where is the value in their money. So in other words, if you look at the Nasdaq, only 50% of the Nasdaq pay a dividend. What does that mean? It means quite simple, that their profits are not high enough, the other 50% are not high enough to pay you a dividend. 25% of the Nasdaq is made up of Apple and Microsoft. The other 75% follow Apple and Microsoft. So if Apple and Microsoft fall, then the Nasdaq falls. Yesterday, Tesla, which I love, by the way, I love Tesla and I love Elon Musk. Tesla was down $8,000. That's 8% it was down, if I believe. No, 10% was down. 10% was down yesterday. Tesla was down nearly 10% yesterday. Also, the 10-year Treasury went to 3.09%. That is a massive jump. I've been warning for weeks that the 10-year US Treasury is going to go above 3%. If it goes above 3%, that is going to push stocks down even further, because the yield on the 10-year Treasury indicates where the market's going. There's a flight to safety. So if investors are moving over to a safe haven like the US 10-year Treasury, then that would push stocks down because they are risk averse. In other words, they're moving out of riskier assets, moving into a safety asset like the 10-year Treasury. Furthermore, if you look at the dollar from the beginning of the year has been really rising up. It's just on one long curve going up. And it's not only against all the majors with the euros and the pounds and the Swiss franc and the Japanese yen, it's also against the miners and the exotics. It's beginning to demonstrate and show dollar strength at the absolute foundation of the dollar, which means that those exotics and those miners are going to be which is the small ones, are going to be affected also. So the dollar is rising on the back of rising interest rates and also a flight to safety. The UK came out with a 25 basis points interest rate yesterday, simply not enough. Andrew Bailey, who's a failure at the FCA, the Financial Conduct Authority, and just got another job for the boys with the Bank of England. He's useless, absolutely crap. C-R-A-P. He is crap and he should be fired. He was fired from the FCA, but he got a job at the Bank of England. Does no one read the CV? Does no one see what these people are up to? They're absolute trash. He shouldn't have a job. He should be packing shelves at Tesco's, maybe, if he's good enough for that. But he is absolutely rubbish, and it's a disgrace to the government and the Bank of England that they've got someone like that who is a failure at the FCA at the head of the MPC, head of the Bank of England. So that's my comment regarding Andrew Bailey. Facebook also has frozen recruitment. Facebook has not taken on any more new recruits for the rest of the year, maybe into next year. That is an indication that the high-tech sector is going through an extreme crisis. Okay, so please be aware of that. What else? Cryptocurrencies are down. As I said, Bitcoin's going to go all the way down to 32,000. We are in a trend down across the board, apart from dollar, which is going up. But the overall trend is down on cryptos, on shares and stocks, etc., etc. Keep an eye on those. Tesla at around about 720 level could be a buy. Something to keep an eye on, not all to say that. But most of the Nasdaq shares were hammered yesterday, 4 or 5% down, and you're probably going to expect further falls going today and next week. This is Mayor Valensky with Driving Markets. Hope you're enjoying it. Subscribe, do some hearts, do some love, do some likes. Speak to you soon. Have a good weekend.